here to talk about inflation. The headlines were rampant last week with the announcement of the October numbers of inflation coming in at 6.2%. And it was completely unexpected. So, what does that mean for a consumer or an investor? Do we need to be concerned and should we worry about inflation? Well, there are many pieces to that coin. And what's inflation? Inflation is when you have sustained price increases for goods and services over a period of time. Now, I remember as a girl how important that was. My first exposure to inflation. Remember, those of you who know, I grew up in Eden, New York, which is a small town outside of Buffalo. And there is a Dairy Queen. And I used to ride my banana seat bike, green, my favorite color, with a sissy bar on the back to the Dairy Queen. And I would have 25 cents in my pocket and I would buy a dilly bar. Now, that dilly bar, they had like three flavors. I want to say at the time it was chocolate, cherry, and of course, butterscotch. And butterscotch, my favorite. And then they came out with this like lime flavor, more like key lime. That was probably a nod to the 70s or something. But dilly bars today are, I want to say, over $4. So $4 and maybe 30 cents. So when I think about my 25 bucks to a $4.25 dilly bar today, that's inflation. So when we know about this, what are the concerns? So in the US economy, we have the Federal Reserve, and the Federal Reserve sets monetary policy. And with monetary policy, their goal is to keep inflation at give or take around 2%. And so when we think about 6.2 in October, you can imagine why that caused concern. But when we spread it out over a period of time, a rolling, say, 2 year, it's really only about 1.8%. So, what's the concern, and why do we really need to be having this conversation? Many, many reasons. So, there are some economists that think that it's transitory because of the pandemic and us coming out of the pandemic and wanting to spend money and driving prices besides bottleneck and supply chain and labor shortages is causing increase in prices. Now, that could be in all things. It could be need based, whether that's housing, food, medical care, utilities, or it could be also like want based, like jewelry and automobiles and cosmetics. So, or me, a dilly bar. So when we think of needs based versus wants based, we actually have control of what we choose to do or what we choose to spend money on. But let's talk more of a bigger picture because if it's transitory because of the pandemic and getting kind of our feet beneath us, that some people think that we'll have a really good understanding whether inflation is something to be concerned about by the middle of next year, like next summer. If it is more of a more permanent concern, because that's what everyone gets afraid of, because if inflation is more systemic and permanent, that means we have to come with very different tools in terms of the Federal Reserve and how they combat monetary policy. So they have a really tough position. Chairman Jerome Powell, I am sure, has enormous humility as he combats with the stimulus of putting money into the economy over the last year and a half to backing up and stepping on the brakes and no longer putting money into the economy and actually starting to sell treasuries. Or what is another thing when you have inflation is the Federal Reserve then starts to increase interest rates. And when there's an increase in interest rates, that tends to have an impact on the supply of money. So there are winners and losers when it comes to inflation. When I think of my home mortgage of this new house I just bought, I actually like the idea of inflation. My house goes up in value, and as I pay my mortgage payment, it seems like I pay it with cheaper dollars as my salary goes up, ideally. And that's kind of the way people look at things. If I were to have school loans, many people do, having a fixed interest rate allows you to feel like you're paying it back over time with cheaper dollars on that payment that has stayed the same. If you have debt that is a variable rate payment, you're more exposed because your interest rate on that will go up. So money costs you more. So, generally speaking, as it relates to consumers, whether it be price or debt, debt can work in your favor on a fixed rate, whether it be a mortgage or a school loan. But in terms of consumer debt, it can be a killer. Now, let's talk investments. Obviously, as an investor, we want to have our assets grow, one, or preserve, like keep our nest egg and our spending power intact. So, what are the strategies if we know inflation is here for a little longer than just transitory? Well, most people think of gold. I don't know why. For centuries, people have always thought gold as an inflation hedge. However, in the last 45 years, up until 2019, gold has actually not kept pace with inflation. Excuse me, several times. Over a 45-year period, gold actually went down in value. So I think there's something about holding it and that it's a store of value that allows people to feel like gold or a commodity is something for them to think about. I tend to think of equities. US stocks and international stocks keep pace with inflation. So you really want to have exposure to equities to allow your investments to continue to grow. So real estate is one, which we talked about from the mortgage perspective, the home value going up, and also you could also own real estate property and charge your renters more. We also talked about stocks, US and international, and we also talked about gold. And then we also want to talk about Treasury protected inflation tips. So, Treasury inflation protected securities is a bond and it pays out a fixed amount to you in terms of interest income. What happens with a Treasury inflation protected security is that the value, the amount that you put into that actually has the ability to go up based on the consumer price index. So if you put in 10,000, that value of that may go up to 10,500 or 11,000, depending again on the consumer price index. So it allows you to keep pace with inflation, which is counterintuitive to think of a bond as something that would be appropriate when we're talking about inflation. So there are pros and cons, obviously, to investing in during times of inflation. But the biggest thing is you want diversification. You want to diversify spreading your risk, not only across inflation fighting strategies, but also asset growth strategies. And you don't want to swerve off course. So we always talk about you don't want the inflation uh, tail to wag the investment dog. So, depending on your goals, you're not going to change your strategies just because inflation exists. You want to be present around it and understand what it means, but it really gets back to the financial plan. And the financial plan should have an inflation number assumption in there and some conservative rate of return assumptions. So, when I think about where are we today, is inflation transitory or more systemic? I don't know. But what I do know is that we really don't want to change our investment philosophy around it, however, we want to be strategic. And then lastly, depending on how you feel, the elephant in the room, what about cryptos? I don't know. Bitcoin is a limited supply, similar to gold as it relates to an asset, currency like. However, it's too soon to tell. So don't go out rushing to cryptos and buying your Bitcoin or Ethereum or whatever coin you are accustomed to. It may not be the best strategy at this point in time. So I hope this gives you some insight into inflation and what that means to you and who are the winners and who are the losers. But I would love to get your feedback. I don't know if you've been to the grocery store lately, but I just got back from California and I rented out of San Jose a Jeep Wrangler and I had to fill up with gas. Uh, and I paid over $4.70 in California per gallon to fill up that Jeep Wrangler as we rode from Santa Cruz down to Carmel and Monterey. Filling up that tank really hurt me because I just didn't expect it. So, where are you feeling the price point? Where are you feeling the ouch? Other than dilly bars, curious to hear what works for you and what your observation has been. and also what your concerns are. Happy to address them in this forum or in a different video. Thank you so much for your time and so appreciative. Thank you.